Hey traders, I wanted to make a video today because I haven't made one in a while to talk about what I've been working on in the lab. And I've gone through a couple of periods in my trading where I'll use a strategy for a while and it works pretty well, but then it begins to fall off, or it's just not working in the markets that I want to use it in. And if you've been trading long enough, I'm sure you've run into this. One shouldn't jump from strategy to strategy, but that doesn't mean that you can't have many tools in your arsenal. And so sometimes what you need is a little bit of inspiration. And hopefully I can provide that with this video because I'm going to share some of the things that I've found by looking for uh, patterns in price. And one of the things that really sticks out to me in all the time that I've been trading is how price tends to break out of consolidations. And if you look on a chart, you can see, in this case, we're looking at the New Zealand Swissy as a Forex pair. You can see that price will oftentimes make big moves. And if you're not in these moves at the beginning, it's very hard to just jump in on a breakout. So the question is, how can we predict these moves? And if we look back on a chart, we can see that price goes through some definite phases, but a lot of the times it's just kind of ranging. So how can we know when price is ranging that it is soon to break out so that we can try to capture that on a breakout? Well, we of course need to use indicators. And I try to keep things as simple as possible when using indicators. The reason for that is I think that you can get way too cluttered with indicators. Ultimately, you should just look at price. But what indicators do is not give you some magic chance of 100% success rate. They help you to see price in a different normalized way. In other words, it uses statistics to break down the movement of price into things that can happen you can see again and again in a pattern. Let me show you what I mean. So let's say that we want to measure when price is beginning to consolidate. So we need to pick an indicator that's going to be useful for that. And as a new trader, you may not know what indicators do. Moving averages will identify a trend for you. But if you really want to capture price as it is going through its function of consolidating, whether it's squeezing. When I say squeezing, I'm talking about this movement right here, where price is starting to get really tight in a range. Some people look for wedges and channels and things like that, but I just want to know when it's doing that. That way I can come and take a look at it and see if it's worth my time. And so one of the things that I'm going to really look for in this case is the Bollinger Bands. This is a good classic indicator, and it's available on pretty much any platform. What the Bollinger Band does is it draws a moving average. And outside of that moving average, you'll see the bands around it. And those are two standard deviations from this moving average. And where that's calculated is it takes the period, in this case, the default's 20. It takes 20 bars and it says, okay, the range from the low to the high is this. Now let's apply some statistics to it. In other words, 68% of the time, it's going to fall inside this range, the two standard deviations. Am I correct about that? That may be, no, excuse me, that's one standard deviation. Two standard deviations is going to be more out into the 90%, but I don't have it in front of me, so I can't remember. But we don't need to worry about that. That's what the indicator's for. It helps us normalize things. So that's one way to tell that price is beginning to squeeze. In other words, when we see a big fat Bollinger Band, like we have, say, like right here, we know that price is expanding. And that makes sense because we've had this trend right here. And as it begins to tighten together, well, that's when price begins to bounce off of these ranges, which can be an effective tool in itself, but that's not quite what we're looking for. So we can look at this and we can see it's squeezing together, but we need something to cross-reference it with. And again, we're trying to find where price is consolidating. So I want to use maybe one more indicator in conjunction with this indicator to find that out. And so what I would look for is another one that I like, which is the Keltner channel. And this is in, or excuse me, yeah, it's in Thinkorswim, but it's also in TradingView. And so if we overlay that, the difference in the Keltner channel is that it is also drawing that moving average. Let's just take off the Bollinger so we can see what's going on here. It's also drawing that moving average in the middle, but the deviation from it on the outside is based on ATR, the true range or average true range. It's taken, in this case, 20 bars, and it is averaging the high and the low of every bar to come up with how large those bars are on average. And that's going to be the average true range. And what we may want to do here is multiply this out a little bit more, say 1.5. And that gives us a pretty good range right here where now we can see price begin to consolidate. Now, here's where the magic happens. If we combine the two together and we look for a strategy, what we can say is that we're going to look for when the two of them converge at the same time. And I really want to see it where the Bollinger Band gets inside the Keltner channel, because the Keltner channel is a little bit tighter depending on how you do it. So let's just make that, let's make the outside of them red. And then what I'm going to look for, I'm actually going to take off the middle line to make things simple. What I want to see, take off that baseline, is I want to see when this red line comes inside of the blue line. And we can see back here that we have it. Let's see, let's just start right here. So the red line does come inside the blue line right about here, okay, on one side. Doesn't really predict any sort of movement, but what about here, where the red line comes inside both of them? Well, again, gives a little false breakout here, but we also have this move in here, where it's a little bit longer and more sustained. Now, one thing that I've done is taken this idea for a strategy and coded it into an indicator. So I'll show you what that looks like on my screen. I've also used some of my own numbers for the period and the valuation, but there's no need to really go into the details. They're very close to what the defaults are going to be. And so what I look for is when these are doing this squeeze, as I would say, the Bollinger Band Keltner channel squeeze. So within this indicator, I've got it where it highlights where these things happen. And so we can cross-reference that by adding them back and seeing that, okay, yeah, sure enough, the blue line, which is the Bollinger Band, goes inside the Keltner channel here. And here's where we have a very prolonged period of this consolidation. And it broke out of this range to make for a pretty good breakout trade to the upside here. There's another one that happened, I think, overnight tonight. Again, a squeeze in here. Now, we're going to see a lot of these squeezes happen. Here was one. Had a little bit of a breakout there. Maybe we didn't make a very good trade off of that, but it did break out of this consolidation. Again, right here. So really what we need to do is we need to find and identify these squeezes. And if you waited to the end of this video to watch the whole thing through and you're interested in getting this indicator that I made, I'm more than happy to share it with you. Just as a reward for sitting through it and maybe getting you a little bit interested in what I'm doing with this right here, because this is an ongoing research here, developing a strategy around it. And I'm not just going to give it out to everyone, but if you're a serious trader, let me know in the comments or send me a private message on TradingView. We'll see you in the next video.